All right. All right, we recording now. First, let's go over how I look at contracts when it comes to ETFs. So let's look at SPY, for example. Pull it up on TradingView. All right, so as we have all noticed, the ATR on SPY has increased significantly. On ETFs overall, we've been getting more movement. So how I like to trade my ETF cons intraday, I like to go like a few ticks out the money. So as you can see, the market's closed, nothing's moving right now. But at the money, you'll see contracts around here. And depending on the volatility, these could be more, but normally around, yeah, they're normally around this price between 150, 175 at the money. So whenever I'm trading ETFs, I try to aim to get contracts around these prices right here. So when the ATR was a bit lower, they were around 50 cents within one or two ticks out the money here. But right now, since we're getting a lot more movement, these contracts priced here are perfect, especially because you could check the open interest on them. You see people are trading them pretty frequently. So I'm pretty sure other people have the same idea, especially on days where we have news and we're getting crazy movement and there's a lot more volatility. You want to get cheaper contracts because we all know that with ETFs, all it takes is a slight move in favor or against you for you to get a significant loss or a significant gain. And nothing crazy like in the hundreds of percentage, but 30, 40, 50%. Because if you're looking at SPY based on the way we like to trade SPY, we're looking for those money calls, right? So let's see when we got one. Let's say here. This hammer was a money call. It only moved, what, about a dollar, not even 50 cents. But let's say you see this move, right? And we're looking at our hourly time frame and we see this hammer come up within the first 30 minutes. So that's going to be this candle right here. Well, this is a fail too on the 15. We don't want to take that, but we see this. Where's our target going to be? About 562.8 and then 563. So if we're in these, well, this is on Friday, so they're up here now. But let's say we catch this move from here at 561 and we're in the 563 cons. We don't need a huge move to put us in the money. But even if these make a smaller move, you'll get anywhere from 25 to 35%. And they're going to cost you $50 or so. So you're making like $25, $30 on that small move. And then if we get the huge move, that's when you see those hundreds of percentages and whatnot. So definitely try to get cheaper contracts, especially on those days when there's news. You don't have to get out the money. With zero DTEs, especially, you want to use the cheaper contracts. That way, if you do lose in the trade, like JR has been saying lately, we want to use our position size as our risk. So who's not willing to lose $50 for a huge move on SPY? I do the same thing with SPX when it's moving. I usually trade this a bit later in the day because the contracts are cheaper towards the end of the day. But I'll do the same thing. I'll load up the chain and I'll look for contracts about this price. I'm not looking nowhere near the money. I'm not looking toward here. I'm looking for what I can afford and what I'm willing to lose if this goes to zero. If I get one contract at 55.80 and SPX decides to move to 5600, these contracts are going to be priced anywhere from $300 to $500 from here. So you definitely want to look to maximize your dollars on these contracts. Now let's look at based off of earnings trade. So with the earnings trade, like we know, we're looking for a 200% ATR move. I'll use Marvel for an example. So Marvel had earnings and we were looking at it on Friday. It moved about 191% of this range, right? And this is the candle from Friday. So let's see. Let's rewind it. But So let's go back to what it looked like prior to Friday, right? This is what it looks like pre-earnings. We'll go to the 30, turn on after hours. Let's see. All right. Oh, I didn't rewind the right way, my bad. So let me rewind it. I'm trying to get pre to earnings move. So right here. All right. So if I'm looking at it pre-market, this is exactly what I saw pre-market. And also what I noticed is a lot of times when those earnings plays are going, when you see this little order block, you can look to get in your calls here. Like let's say it's bullish. We see Marvel gapped up from the night before. I'm looking for calls here. I'm not looking for calls above the pre-market high. I'm looking for calls here because I want to see the pullback and then the go. But let me stick to the subject. This is what it looked like. My target was 81.40. Based off of the gap up, that was the next higher pivot. It was the 81.40. So when I go to Marvel on Friday, fast forward. All right. This is why you don't want to take that break at a pre-market high. You see it right there. But so based off Marvel ATI, it's $3.29, right? That's his typical ATR. So we know that we're looking for double that move. So we could expect it to move about $6, right? So I'll go here. I'll go to the contracts. And I wish I could back up to the old contract, but I know Marvel could move $6 within a day based off of that ATR. This is what this is as well. It's the ATR if you use TOS. So you multiply that by 2, right? So when I was looking at Marvel, I'm looking at the contracts that are here. Even though we're here, I'm looking at the contracts that are either at the money or at the target or at that double ATR target. So if we're at $78, this is a $3 move. It can definitely get there based off of the standard ATR. But if we're looking for it based off of the earnings move that we're looking for, this could potentially get to 85. So I'll go here. I see that this is the nearest pivot. We could target this pivot as well, but this is going to be the next target, the ultimate target. But it was on a Friday, so I know 0 DTE is going to work against me. So instead of getting the more expensive contract, I'm going to get the cheaper contract. That way, if the move does go in favor, I get an exponential increase on my profit because that's a very volatile move. We have earnings that's giving it the volatility to create the move. And as you can see, it triggered to the upside, but it failed. So to the downside, we can look at our targets as well. We're going to look pretty much the gap fill, honestly. If it's an earnings play and you see it fail to the upside, you can definitely try and target the gap. So it pulled up, it failed all within that first 30-minute candle. You could have got, what cons could you have got? What was it at? 78. So you could have targeted what would I get? Probably the 75s because it's Friday. Like if it was in earlier in the week, like a Wednesday or something, I would target here. I would get the 71s or the 70s because if that move decides to reverse and continue, you could hold those going into tomorrow. You could sell runners. I mean, you could sell some in profit and then leave a runner and then maximize your profit because hopefully it goes here and then here. Especially based off of this, it did reverse back to the upside. So it wouldn't be something that you want to continue to hold to the downside, but that's a good way to look at earnings contracts. You want to grab either within the 200% ATR at your target or at that ATR range because those contracts will be extremely cheap and all you need is a huge move in your favor and you'll be good. All right, so that was ETFs, that was the earnings, and now for strat setups. Strat setups, I'm pretty much the same. I'm looking at the target. I know a firm had earnings last week, but I am looking for it into to continue tomorrow. It does have a 3-1 setup on the 4 hour. Let me end this replay. So it does have a 3-1 setup on the 4 hour. So I would set it up like this. I would set the high, I set the low of day. I set one here for my 4 hour trigger to the downside. And then I would set this at the previous day high. All right. So now if I'm looking at a firm from this week, I know they got a price upgrade to 46. There's an order block here at 48 off this 4 hour setup. We see the top of this block here at 49. We see a pivot here. So we could target here. We could target here. Right? But here's why I want to continue to look at a firm, regardless of this 4 hour setup, regardless that it has that $46 profit target. If you go to the week, you see this nice bullish bar on this 2-2 setup off the weekly, which it was pushed further by earnings, obviously. So we're going to look for another 2-up week to go here. But if you go up higher frames, you see we have a 3-bar on the quarter for a firm. And this is a nice 3-bar. You could draw a fair value gap right here too. So that's even more confluence. And we're pretty much sweeping lows. So a firm on the quarter, we remember we're about to open up. We're looking to target here at 52.77. And if they really want to get crazy, this would be a nice long-term swing trade. Because once we get past this pivot right here, a firm could be looking to go back to $100. I'm sure it's going to take a lot more than just a chart setup to get it there, but that's where we'd be targeting it if we're looking to trade it long term. I'm a short-term trader though. So based off of my daily trigger, if I was to take a firm tomorrow, we do have a short week, 47.44. Firm likes to move about $3 within a day, but you see the ATR expanded a bit because of earnings and that volatility. So for tomorrow, if I want to take a firm, yeah, I would look at those 47 contracts. They're priced the exact way I like them, has enough open interest. It can definitely get there. And as you can see, there's a lot of people in the $50 contracts as well. So I'm sure they saw that higher frame setup. And as you can see within this week, that's pretty much a firm's target by the end of the week. First pivot, 47.44. If we want a 2-up week, we should take this out. We could take it out tomorrow, honestly, if it wants to move how it could. But this would be the target for the week ultimately. So it wouldn't hurt if you're going to buy those contracts. If you're still fairly new, I would recommend buying the 2-week out contracts. They're not going to be about that price at that same target, but just to give yourself a little more room for the trade to work. But this is not a bad contract to take for this week, that $50 contract. I like that. I probably won't trade it tomorrow because another way I like to look at it is I want this first pivot to put me in the money. Then if I'm going to hold runners, there's my target. This one will be perfect to not only get you a nice percentage if it hits it tomorrow, but if you hold it into the end of the week, that would be a perfect contract to hold into the end of the week. I look at SMCI too. And it's just like SMCI. Like this is a bigger name ticker, right? We got a $46 range. I don't know who in here would ever want to go to see SMCI, an extremely volatile ticker, and trade contracts about these price. I don't ever go to SMCI and look at cons like this. When I go to SMCI, I'm expanding the range of the strikes. I don't know if it loaded, but I'm looking for cons that are like 150, 200 at max. On bigger name tickers, I like $300, 3 to 350. You always exactly. On Friday, I had the 320 put, I believe. It was my bad. I had the 420 put, and I was in the money. and those were dirt cheap when I got in. So you definitely wanna maximize your dollar. Let's say you got $1,000 account, $1,000 account, right? And you want to put $300 in the trade. If you want to trade a bigger name, you grab one $300 contract. If you want to trade a firm, you could grab whatever five, six, $50 contracts. You could grab 10 $30 contracts. If you want to trade an ETF, I'm 100% sure you would rather have six spy cons at $50. That way, if it hits a one target at 50%, you sell four and you leave two runners. You always want to make sure you're maximizing your potential on all these trades, especially with the risk with let your risk be your stop loss. If you're willing to throw $300 in a trade, throw it at 300, have a bunch of cons, sell what you want when you're in profit, leave runners. Always leave runners or die. But that's it for now. Appreciate y'all coming on the Zoom. I'm gonna stop the recording and then I'll let everybody answer questions or ask questions, my bad. If I could see how to shut it off. I don't know. But I'll unmute I'll take it so that you can unmute yourself and then you can ask questions. One at a time. Go ahead, Butch.